Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Wednesday, January 28th, and my name is Raleigh White, and I'm coming to you live from a beautiful but chilly day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a continued focus on the trading pit. He's going to begin today's session by giving us a midday market analysis and the top stocks that he currently has on his watch list for this afternoon. Then he's going to be talking about how he converts trading pit alerts into option trades. He's also going to share when he likes using a delta of zero point 0.7 versus zero point 0.5 when he's looking to buy calls or buy puts, or when he's looking to put spreads into play. He's also going to talk about why he uses a shorter time frame when he decides to place a debit spread, and he's going to give us an example of using debit spread versus call options on trades in the markets, and he's going to answer lingering questions that we've received about how he scans for stocks in the pit. So we've got a great session lined up for us today. And if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that I have opened the chat to everyone, and we do have some ground rules. If you're going to post, please be kind and positive. Also, keep to the topic, no political discussions allowed whatsoever, and keep your side conversations with individuals to a minimum so that the rest of us don't get distracted and can focus on the education and the information that Roger's sharing. Because after all, folks, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, if you were with us this morning at 8 o'clock for Roger's pre-market briefing, and I certainly hope that you all do that, you'll note that there were several catalysts on tap for today. In the chip sector, we noted that Texas Instrument came into the open plus 6%. Intel was up 6%, Micron was up 4%, and Nvidia was up 1%. So the chip sector was flying high. On the tech front, we noted that STX was up 10%, and we had ADH and ADP and AT&T all giving earnings before market open. On the industrial front, we had GEV, DHR, GD, and GLW all releasing earnings before the market opened. On the finance front, we had Progressive and MCSCI giving earnings before market open. On the consumer staples front, we had SPX releasing earnings before market open. And on the healthcare front, we had ELV releasing earnings before market opened. And finally, folks, on the Fed front, we have crude oil inventories coming out this morning. And then we have this afternoon the FOMC announcement and the press release that follows that. And there were also some delayed reports on tap that we just don't pay much attention to because they're delayed reports. Anyway, for those of you that are wondering why we even focus on these catalysts, well, from Roger's perspective, anytime there's information that's either known or will become known during today's trading session, but is not yet priced into the market, those are volatility flashpoints, and we need to be aware of them. So, for example, if we're looking at maybe placing some trades in the industrial sector, it would sure be good to know how that sector is performing with all those earnings coming out before market opened. Now, as far as Roger's large cap pre-market stock watch is concerned, we noted that he gave us 26 tickers today. He likes to call them red meat. These are great tickers. We had 13 to the short side and we had 13 to the long side. You'll see that I do have an asterisk here by CMI. Roger identified this as an A line that was setting up on this particular stock. So, guys, please keep in perspective that these are all legitimate stocks that Roger has his eyes on before the market opened because they were starting to look like they might set up for potentially good trades. And if any one of these tickers meets his criteria, more than likely he's going to share that with those of you that are in his trading pit or in his other premium alert services. So once again, these are legitimate stocks that he's looking at. They're not quite ready for prime time, so you don't automatically trade them, but they're on his watch list, which means he's keeping his eye on them. As far as his pre-market thoughts are concerned, well, we noted that the future was largely up coming into the open on gains in the tech sector, QQQ, and the SPY. Okay. We also noted that the put call ratio was still in balance, but slightly favoring calls, and that the VIX was still continuing to inch higher, but was still below that critical 18 warning level that we like to keep an eye on. He also pointed to the fact that stocks that are above the 22 moving average are rising, and he believes if they rise much more, I think there was 365, when that number gets into the 400s, he starts to get a little bit concerned because it's a bit too toppy and he expects a reversal. So he's keeping an eye on that. But generally speaking, he likes the momentum in the market because when we looked at the sectors and sector strength, we see that there's a rotation going on here where there are many more speculative, interest sensitive stocks that are at the top of the sector watch list. And those are the kind of things that give fuel to a bullish market. So he likes that. On the flip side, though, we did notice that there is divergence. Despite everything that was going on with the QQQ and the SPY, we noted that the bonds were moving lower. So once again, this is a divergence. It's nothing to pull your hair out over, but it's just something that normally you'll see the bonds and the stock markets, moving somewhat in concert with one another. Well, they were divergent coming into the open. He also pointed out that once again, the indices are at all-time highs. Toppy, he says, they're toppy, they're overextended. In particularly SMH, which is the chip sector, which is way overextended. And from his perspective, he says, you know what, guys, quite honestly, I kind of like blue chips and small caps a bit better than tech stocks or chip stocks at this point in time, because once again, he says, I expect there to be a pullback. Bottom line, he said, guys, we're in a tornado. Why? Why are we in a tornado? He said, because we've got FOMC meeting minutes and announcements and presser this afternoon, and we're not quite sure what's going to happen there. And tonight and tomorrow, we got a ton of big tech earnings
What do you
coming
say?
out. And so from that perspective, his recommendation is, guys, I would hunker down. Once again, we got a storm coming. Hunker down for at least the next 48 hours. Look at preserving your capital. He even recommends basically looking at non-directional trades and maybe some scalps to the short side in the meantime. But his point was we've got a lot of stuff that's happening. Nobody knows what's going to be going on. And this is not the time to put significant, capital at risk. So, as far as today's agenda is concerned, for all you fabulous people that are joining us today, boy, did Roger put together a great agenda. He's going to start by giving us a midday market analysis, and he's going to show us what his refined watch list is for the balance of the day. We already discussed what his pre-market watch list is concerned, and that gets distilled as the day goes on. He's also going to talk about how he converts trading pit alerts into options trades. He's going to show us when he uses a delta of zero point 0.7 versus 0.5 for calls and puts and spreads. He's also going to share with us why he likes using the shorter time frame on debit spreads, and he's going to show us an example of trades using a debit spread versus a call option. And finally, we want to answer some lingering questions about how he scans for stocks in the trading pit. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with his presentation. Also, folks, remember the chat room is open to everyone and we do have some ground rules. If you're going to post, please be kind and supportive. Number two, please keep to the topic. Number three, no political discussions allowed whatsoever. And also keep those side conversations between yourself and another individual to a minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing. Because after all, folks, he's here to give us an edge in the market and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to Matt. Matt, how you doing? Roger, my friend, how are you doing today?
I'm doing well. How are you doing today?
I'm doing So much better. I can't tell
Good.
you what a good night's sleep and clean living will do for you, but I feel a lot better, and I'm glad I'm here with you, Roger. Interesting day today. Once again, it's an interesting week, as you pointed out, with everything that we've got going on. And I love your analogy this morning. You're like a hurricane's company coming. Let's call it a tornado. It's time to hunker down, which kind of seems counterintuitive because everybody just wants to jump on the bandwagon. But the point
Yes, it
is,
is.
that's a false sense of security there.
Yeah.
You expect some reversals here, which would be healthy. You don't
Yes.
expect the sky to fall, but you expect some reversals, some reversions back to mean, all the kind of things that make you the brilliant technician that you are.
Well, thank you. I appreciate that. Um, and actually, as a matter of fact, we just took a profit on we took two winners in the pit today. By the way, we're going to talk about the pit, but we took a profit on. Let me just share my screen.
Yeah,
You know, this morning I woke up, I was so depressed, and then
I heard your
I
son's
logged.
going to Australia. Phew,
Yeah,
that's on the
yeah,
other side of the world, Roger.
yeah. I'm really, and I really do mean I'm upset about that. We went long Taiwan Semiconductors,
Yeah.
which I may reload again today. Actually, excuse me, if we can get back above the view up here. And then what was the other one? ASTS. We just got rid of this one. We got it. We held it for about an hour, maybe I don't even, maybe less than an hour. We got it somewhere around here, about right about the VWAP. It went a little bit higher, and then it dropped all the way here, and then we got out of it right here. We took about a buck out of it, you know, but we were in it for a very, very short. It was a very, very short-term trade. I don't want
Hey,
to. I don't want to
Roger,
hold on.
just a
Yeah.
quick technical issue. People are saying that my microphone is significant. You seem a little quiet. I don't know if you
Oh,
can raise your microphone volume a little bit.
I do. Of course, I can. Yeah, let me do that right now. Yeah, I'm glad you told me. It's good to know. One second, one second, one second.
Okay.
Bear with me, folks. Bear
So
with
now
me.
you're very, very quiet. Can hardly hear you.
All right, hold on one second. Caster, test, test, test. Can you hear me now?
Yeah. Can you come up a little bit more?
Yes. Can you hear me now?
Yeah, I think that's better. Folks, would you agree that we're more in balance volume
Is
wise?
this is this better? Now I just don't want to I don't want to
You don't want to be clipping. I know. Yeah.
yeah. Yeah,
No, I think you're
so
good.
okay. All right. Are we comparable now, folks? Raleigh and I, are we like on the same level in terms of volume? I don't have the
Yes.
chat on, so
Yes, yes. Five
oh
by five.
oh
Everybody's saying
oh
good. Excellent.
okay. Raleigh, you know you will know if I clip and you will tell me if I clip.
Yeah,
So yeah.
exactly.
Yeah, yeah, yeah. Yeah. I know that you don't I know that you know what it means to clip a microphone.
Yeah.
If you don't, well, we got
It's not a
bigger.
football term.
No, no, no. Okay, so let's get back to what Raleigh was talking about. We have the FOMC announcement. The announcement is going to tell us what the Federal Reserve how they're looking at the current data. Okay. Now, as far as I'm concerned, the data does not look all that bad. Okay. The data does not look all that bad, but there's a lot of unknowns in how many interest rate drops we're going to have next year. Now, next year, it's already January is almost over. I'm talking next year, this year, 2026. They're thinking March. I'm thinking somewhere. I think, okay, I don't remember. You guys may correct me, but I think they're thinking March, May, if I'm correct. And I'm thinking more of July. I'm only going back one cycle over. So I don't think anything drastic. Also, there's nothing imminent. This decision is not going to change anything imminent. So I think the effect of it will be a little bit, unless Powell goes and says something crazy. And I'm not seeing that at all because the data has been getting slightly better. And things are looking a little bit better, but there's still a lot of concern. And I think they're just going to come out and say that hey, we have to take it step by step. We have to be very cautious right now. And as of right now, we're anticipating this, and this. Okay,
Mhm.
I think that's what I think that's where we're at right now, and I think that's where we're going to kind of stay. So ultimately, I'm not expecting volatility to be too great. I'm expecting volatility to be relatively mild, um, and short lasting, but not when they announce it at 2 o'clock, after 2:30. And sometimes he can go, as Matt pointed out to me yesterday, that Powell, he can go on and 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 on. Basically, he can anyway, he can go on and on. So the moral of the story is, just be cautious and keep an eye on these levels, on my levels, okay? Because so far we've been in a fairly choppy market, and they work really well in choppiness. Also, I hate to say I told you this morning, but remember I told you this morning that we were getting kind of close to the edge here. And
Yep.
when we get close here, the market dynamic starts to shift. It's not because I'm that smart. It's just because it happens most of the time. And today we got the announcement, and we got earnings on mags. So you got all sorts of stuff. But here it doesn't look that bad actually. But here SMH. Here it's really getting, it's coming up there. So
Yeah,
this
and that's
morning,
what you predicted, Roger. You basically said, guys, from the market open, you expected a liquidation event that people are going to be selling.
yeah, and that's
Yeah.
exactly what happened. And that's
Yep.
why I wanted to get out of Taiwan Semiconductor pretty quickly, and we did, and made a profit on them. With potential, I reserve the right to get back in them, as FYI. And by the way, that's the load that I drew for you guys at 7:30 in the morning today. So if we go above the VWAP, we'll start reverting here. But again, I'm not seeing this ending well. Like right here, look, it comes up here for a little bit, but then it just doesn't get. After it gets up here, it tends to not really do much unless there's volume behind it. And right now we have no volume behind it. So look, anything can happen. And I want you guys to understand that we're talking in probabilities. We're not talking in absolutes. A lot of, not a lot. There's a few people who forget that everything I'm doing over 100 spins, not over the next result. It doesn't work that way. I have no predictive ability. Okay. And if anybody tells you they have a predictive ability, they need to be put in the loony bin. Okay. Fast, like fast. Okay. Nobody can predict anything. We're all just guessing. We're all taking educational guesses, as my 12-year-old likes to say. So my point is, we're getting a little too far away from the 12-day EMA. We're starting to get a little bit ahead of ourselves. If we were ahead of ourselves on volume, I would say, well, but the volume's been really, really low too. So I don't really see this having a lot of legs, as evident by what we've seen this morning, which was pure selling pressure as soon as we opened nonstop. That's the intraday right here. Okay, so far, that's pretty much it. And also look at major stocks like Netflix. Remember, it's been on our short list forever. This is a perfect A line to the downside right here, right now. That's an A line right here to the downside. So it goes up for 2, 3 days. It huffs and puffs. It goes right to the 8-day moving average, and then it starts coming right down again. Okay. Real simple. And you could see what happens right here when it tags the 8-day. Right there. It peaks out right there. See that? Peaks out right there. Look at that. Look at that. Look at that. Look at that. Wow. And look at that. And what happens every time it comes up here? Look, it comes back down here. It comes back down here. It's probably going to come back down here if I had to guess based on what I'm seeing right here, right? Learn to read price action. Stop it with all the nonsense, with all the buffoonery. Just learn to read price action. Look how straightforward this is right here. Look how it follows the 8-day EMA rally.
Man.
Beautiful, beautiful. People are trying to invent algo systems instead of using a simple moving average. It blows my mind away.
Yeah.
Anyway, you have an A line to the downside. If you like freebies, I just gave you a freebie, okay? And earnings are not anytime soon. Okay? All right. So the state of the market right now is I'm expecting a lot of volatility. I have absolutely no idea what's going to happen, and either does anybody else, because I have absolutely no idea what's going to come out of Powell's mouth, and I have no idea what those mega caps are going to do. And to make matters even worse, Raleigh, it's not like they're coming out one after the other in terms of like one day, I could maybe tell you what one will do, but how in the world are we going to figure out what their future projections are, what their investors are going to think about, do you see what I'm saying? And they're all coming out at the same time. So it's impossible to make a prediction. Well, here's my prediction. We're going to have a lot of volatility. And what I'm actually looking at is straddles and strangles, that I'm looking at straddles and strangles on the cheap that expire on Friday. And what I'm going to be looking at is let me tell you what I'm going to be looking at in case you guys want to help me find something, okay? I'm going to be looking for indexes where I could find a combination of at the money call and put, preferably right at the 8-day EMA, for half of the ATR. See the 10-day ATR? I want to buy a call and a put that expires on Friday, hypothetically speaking, not on Netflix, but let's say this was the Dow or the S&P or whatever it was. I'd want to pay about $1.25. A dollar. It doesn't have to be. It's not a science. It could be $1.30. Okay, so about 65 cents for an at the money call or a put. So let's just take a look. Let's just take a quick look and see what it costs. Okay, where are we right now? 695. Okay, so 695. Let's go through. Well, we don't actually. We can go two days out here. See how expensive they are. I'd have to pay. Well, the ATR it's $6. I'd have to pay $3.30 for the whole thing. I can't even get a call for that. And the put 270. So yeah, they want me to pay almost full price. I want to pay half. I want to pay $3.30. If I can do that over time, I will make money because I'm buying half the value of half of the average movement for the last 10 days, both sides, which is what I want to do. What they want to do is they want to charge me double this. I want to pay half of this. Okay. Anyway, just something and that's what you want to look at for today.
So I have a question.
Yes, please. I like questions.
If in that case, would you consider doing an iron condor?
Yeah, it's not my thing. Would I consider doing an iron condor? You could do an iron condor, but the problem with iron condors is
you're saying like the premium's high, so you can't get the spread, but so it's better to be a seller right now.
Oh, it's definitely well, yeah. Right now would be a really good time to do it. Yes, right now would be a really good time because the premium's so expensive. Right now, you could do a pretty good iron condor. Yes. Yep, he's absolutely right. Because the premium will be more expensive. The problem, Matt, is that these options are pretty tight. They don't have there's not a lot of arbitrage here like with stocks.
Right.
Which is why you never see me doing, you're bringing up a great point. In terms of volatility, you're right. In terms of premium, you're right. But in terms of the options, these suckers are so tight in terms of where they're supposed to be, you can't arbitrage anything out of this thing.
Oh, so they're the most liquid assets in the world.
Right. So right now, let's say 696. You could do it. You could get it done for about $1. And the odds are it'll just stay here over the next 2-3 days. And for anybody that doesn't know, an iron condor is just a credit spread on the put side and the call side. You're actually, to be honest with you, Matt, you're actually better off doing a butterfly, and I'm not going to get into that today. That's too. See, I'm not into that stuff. I love directional trading. Kane likes to talk about that stuff. What's his name? Chris Pulver.
Chris Pulver. Yep.
Yes. That's his thing. That's his that's their wheelbase. I'm just not into that. But I'll tell you something interesting, and we'll move on. But this is a good discussion we're having. I'll tell you, this is what's interesting. Um, one of the original reasons why I don't like those type of trades is because remember, I'm old school. I'm old and I'm old school. Was because back then the commission would kill all of it. Nowadays, that's not an issue. You could trade right now without commission. So now it may be something worthwhile looking at, especially when VIX gets above 20. Just my 5 cents. Okay. But that's a good discussion. So here's another trade we took today. Folks made money on this trade and they made money on this trade right here. And that would be, I'm just going to put a little alert for myself right here. Second bite of apple. Okay, there we go. All right. There's our second bite of the apple right there. Nobody says you can't double dip, right, Raleigh?
Anytime the setup is good, go for it.
Exactly. Exactly. Anyways, so let's talk about options. Yesterday, I explained to you how I use the Pro Trader dashboard to help me find trades for the pit. Today, I'm going to talk about options, okay? And I'm going to talk about how to convert your trades into options and when you want to convert your trades into options and what length of options you want to do, okay? Excuse me. I'm sorry. Excuse me. So, do you see right here this is perfect actually. Do you see this stock right here, Taiwan Semiconductor? See how it just now today, late afternoon yesterday and today went above this line right here? Okay. You see how far it is from this line right here? And Raleigh, you're going to have to be my eyes and ears because I'm literally trying to keep the chat closed
Yep.
so that people can focus on this, okay? And hello to everybody. I just want to focus on this, and I want to give you the best education and the best stock tips. Okay. Okay. So this is an entry signal to go long a pattern we call an A line, and I trade this all the time. Okay. I did this last night in the pit. We took profit on this trade. But this trade right here, if you wanted to, you can hold up to here. It's got that long to go. As a matter of fact, you might have just heard me saying a few minutes ago, I entered a buy stop to come back and trade this again. Okay. Because it's got much more room on it. I just wanted to get out of the morning. I didn't want to participate. I felt that semiconductors were overextended. I said that this morning. So I wanted to get out on that morning pop, and we did. We got out right here. And then it just came right back down, and I want to get into it again. I want to get a second bite in the apple. We made a couple of dollars on it, but I want to get in on it again. So if you see me in the pit, so the kind of trades we do in the pit, if you see me do these type of trades, that's a good swing trade 4 to 6 weeks. Okay, so I'm gonna write this down. I've done this before, but I'm gonna do this again. I'm gonna do this again because, well, it takes no effort on my part. So I'll give you all this. Okay, I mean, Raleigh writes it out here. I'm going to call it options for the pit recipe. Okay. Okay. And here I'm going to unrestrict this and later I'll give it to you not right now after I'm done. So here I'm going to do this. Okay. Going back to school. So, okay. We're talking about directional options trades. And here we'll talk about debit spreads. Okay.
Okay.
Because we don't do credit spreads in the pit. We do that in weekly cash flow. So scalps and debit spreads. Okay. All right. So I'm going to take this off the screen for now, show you. So let's start here. When you see a setup, when I give you a trade like this in the pit and you see it has a good amount of room up here, that's a swing type of trade, usually, because you could hold this unless you want it to be a day. Okay, if you want it to be a day trade, then you can always make it into a day trade, right? So that's a swing right there. So you go 4 to 6 weeks out, delta 0.70. Between 65 and here. 75. The reason you don't want to go too much deeper is because they tend to get illiquid when you go a little deeper than that, just from my experience. Okay. So that's a straight swing trade. Okay. And again, if you have 75 delta and if you're good at getting fills, you should be able to day trade with these as well. You should make 50, 60 cents, 70 cents, because that's a day trade. But these are swing trade type of trades. So when you see this type of pattern, okay, when you see, what was that stock? ATRT. No, wrong stock. Hold on. Oh, yeah, STS. You see this type of stock right here. See, it hasn't touched this area yet. Okay. You could swing trade the stock if you wanted to. Okay. Again, that falls under this right here. Why? Because this is lower than the high. Once this reaches the high or starts trading around this area, you don't want to start initiating swing trades. And I want you to listen to the words coming out of my mouth very, very, very carefully, because I speak extremely intentionally. Okay? Not intelligently, but intentionally. Notice I didn't say, I said, don't start looking to get into any swing trades when you're here. Okay. I didn't say you still can't be in a swing trade when you're here. I didn't say that. So listen to every word that comes out of my mouth. I'm very clear when I try to describe something. Okay. So, and if you ever have a doubt, you can always just do this, kind of teaching you stuff at the same time. Okay. See, it's above here and you're still not here. You're not touching this. That still falls under swing trade. Now, again, if you want to day trade any of these, that's fine too. A lot of people do. Okay. So, but that would be a swing trade in type of trade in the pit. That's a 4 to 6 weeks delta of 0.70 between 65, 75. Now we'll talk about day trades. Okay. Day trades. Okay. 1 second here. I just got to check something here. Okay. Let's continue. All right. So again, this you could still this I would say this is a I don't know, I'd be cautious. Like right here, like 115, 116. Here it's already getting a little uppity, a little too high up, getting near the previous high. So I would say this is a maybe a swing trade, maybe a day trade. Okay. Now day trade. If you're day trading, you go 4 to 8 days out. Okay. All right. Delta 0.70 as above. Okay. Let me show you a good example of a day trade. Let's see. That's perfect. Look at Micron. See where Micron is? See how this See this right here when you're here, all the way up here, those are day trades. Those are day trades. If it right here, no, excuse me, right here, it's still a swing trade because it's basing right here. But here, this is too much for swinging. Okay. Let me give you another couple of examples. FedEx, this is a swing trade. Matter of fact, I have this right now as a swing trade. I think Richie has it as a swing trade too, in my portfolio. Let me just see if I could find. No, that's ugly. That's a swing trade still. Very slow, not methodical. Let's see if I could find you a good day trade right now. Okay, that right there. It's a day trade right there.
So, Roger, at this point,
Yes.
just several questions have come up, and I love the question because these people are new to the room, but they're very intrigued by if you could just take a second, the red and the
Yes.
green dotted lines. They're important to your decision-making process, and a number of people here are going, "What are those dotted lines?"
Those dotted lines are. One second, I just want to check something here, real quick.
Sure.
One second. I have a small cap that I'm messing with right now. Yeah, one second. One second.
Yeah, so when you're looking at Roger's charts here, you're going to note that he's got some key moving averages that are there, and those are basically solid lines, and he can go over what they are, but they're the 200, the 50-day, the 20-day, the 5-day, and then he's got these dotted lines. And these dotted lines basically help him determine whether a stock is overextended in either direction, and they are basically deviations using the average true range.
Yeah, sorry about that. One of our small caps hit it, so I just
Yeah,
want to
go
make sure
for it,
that I'm not.
Roger.
No. It's
Yeah.
all there. I just wanted to give them. See, the thing with the small caps, once they hit our stop, our entry, I already have a stop loss and a profit target in place. So they already know right now what their stop loss is, and they know what their profit target is. So it's either yay or nay. We don't even have to watch it. Sorry, I didn't mean to do that. It's very rare that we have alerts on the small caps. That we have alerts in the small caps this late in the day. As you know, they usually happen early in the morning.
Yep.
But so this is a really good example. So let me show you. You're talking about these things right here, right, Raleigh?
Yeah, so Roger, for example, there's a number of people here in the room that they're seeing your charts for the first time. And
Okay.
so they were wondering, so you've got moving averages there, but a lot of questions around the green and the red line, because obviously those are keys for you.
Yes. So this right here. So you see this yellow line? That's the 8-day EMA, right? That's the
Mhm.
8-day simple moving average, right? Exponential moving average,
Exponential.
excuse me.
Yep.
Exponential moving average right there. And this, okay, so two things. That's the 8-day moving average, and this is the average true range, the 10-day average true range. And what these are is we multiply this by 1.5, 150%, and then we add it to this, and then we subtract it from here. That's what it is. So this is the 10-day ATR. Okay. The standard setting is 14. I use 10 days. Okay. 10-day ATR. And I use 150% of the 10-day ATR. Because what that tells me is that it's 150% away from the average. The 8-day ATR, the 8-day EMA simulates the average price of the stock over the last 5 days. Okay. So when it's 150% above that price, we're getting beyond the average movement.
Right.
And we're not. And if we're position trading, that's fine. But if we're swing trading, we're trying to get above those swings. So I find that the only time stocks stay up here, and again, folks, this is not a science. I mean, there's other things that I look at, but you'll often find that volume and price around these areas coincide quite a bit.
Yep.
And that's why I say when the stock gets here above the green line, but you got volume behind it, they make really good day trading stocks. They make really good day trading stocks. Okay, because that's when you see a big like last push or a squeeze or whatever you want to call it. But that's where the meat is. But if you're swing trading, you want to get in around here and ride it up to here and then get out, which is exactly what I'm going to be doing on Roblox probably later today when it gets here. Let's putting my anchor right there. See where this VWAP is? When this sucker starts trading closing above here, I'm in. Okay? So here. VWAP, where's my VWAP greater than where's my price history? Right here. Crossing up. No, crossing down, excuse me. Yes, price crossing up the VWAP. Yes, exactly. A line. All right. And I want to put it for a week. Okay. There we go. Okay, sorry about that. But so like these, but when this stock is doing this and volume is really good, that's when you want to day trade it. So getting back to our little thesis here. Let's get back to where we were. I'm sorry, I didn't mean to get sidetracked for a second there, but I just needed to. But this is how we trade the small caps. At the moment we get the entry, we know the profit target already, and we know the stop loss. So they know it. There's nothing else to do. We're not sitting here and going. We don't need to do that. Okay, so day trades 4 to 8 days out, delta of 0.70 or above. Okay. Now, scalps. What are scalps? Okay. Scalps is when I'm seeing really high volume and just extraordinary price on stocks like this, like really quick trades. Like they last about 20 minutes, 5 to 20 minutes. Okay. When I'm just looking for a move without anything going, I can't take any counter move. Okay. Counter move. And again, these are just bonus trades. Usually I DFDs trades. These I'll just say, hey, there's a scalp or I'm doing a scalp. And those I'm actually finding out that doing closest expiration, 1 to 2 strikes out of the money works best. Because they pretty much are like lottery trades. And lottery trades, like you buy them for 30 cents, you sell them for 60 cents. You buy them for 50 cents, you sell them for $1. You're looking for, once the momentum stops, the option fizzles away. So basically, you're looking for Friday's expiration. Now, what if it's Friday? If it's Friday, go with next week's expiration. So Thursday, it's still okay to be in them. Now, if now we only engage with these when there's really strong momentum. Okay, when they're really strong momentum. If that momentum fizzles out, you get out. I'm going to give you good advice with these. I'm going to give you the best advice anyone's ever given you. Set your alarm at 15 minutes. Okay, if momentum sets up, just goes, and momentum fizzles out for 15 minutes max, just get out. So if the stock just pauses and doesn't continue going your way, wherever it is for 15 minutes, you get out. These are very fast trades. These are 5 to 30-minute trades. Okay, these scalps. Okay, like day trades, we could be in the stock all day long, and sometimes I'll even hold it overnight till the next morning. But scalps are not like that. Okay, scalps are not like that. Now, you're probably asking here is you're probably asking me here. Oh, one second. Yeah, sorry about that. Well, Roger, a lot of your options are $10. I mean, a lot of these options are $10, $14. What if I don't have that account? What if I don't have an account that big? Debit spreads. Debit spreads are your best friends. So, for example, oh, my door is open. They turn up the heater. They jack up the heater here so much. Matt, are you behaving yourself today?
Yep.
On the trades?
Mm-hmm.
All right. All right. Got to make sure he's behaving himself. Okay. Okay. All right. So let's say you want to get into Rocket Lab. Okay. Hypothetically speaking, of course. And you want to swing trade it. Okay. So you'd follow my advice. Let's just say you'd go 37 days out. You'd go point. You go point here. You go 0.69 delta, close enough, right? Remember 65 to 75? And right here, it has no liquidity. So, but anyway, just to give you an idea, you can go a little closer here. Okay, 0.70, 30 days out right here. It's about 1344. It's at the midpoint and it hasn't moved anywhere. So you're going to spend $1,344. Okay. Which again, if you have a good size account, it's not that much money. But let's say you're just starting out. Let's say you don't have a huge account. Let's say you're just getting, you want to dip your toe in the water. I could show you how you could do this trade on the cheap. So you go right here to 9 days out. You use the same criteria that you use for day trades. Okay. 4 to 8 days out. 4 to 8 days out. Okay. Like this is 2 days. So you go right here, 9 days out. Okay. I just need to type something in, Raleigh. It'll just take a second, okay?
Yeah, no problem. And folks, as I'm sure I hope you can appreciate, this is a live presentation, but simultaneously, Roger and Matt are also managing live trades, that they've issued in their various services. So from time to time, we have to take a quick time out as we manage those live trades. And Roger is he's putting all this on a Google sheet, and as soon as he's done, he's going to share a link so you can have it, folks. You'll have his option selection formula.
Yes, exactly. So again, let me just continue. Let me continue doing this. I apologize. It just takes a second to place them. I just don't want to make a mistake writing orders for 457 people. It wouldn't be fun. So let me show you. You go 4 to 8 days out, or the closest option, and you go point delta 0.50, not 0.70, 0.50, which is right here, 89. Okay, and then right, you sell the 90. Now the difference in price between these two, it's actually quite expensive. Let's see, it's actually really expensive. Usually it's about this should be about 50 cents. Well, you could just go right here. Look, 548, 529. It's what? It's 19 cents, right? Your profit potential is $1. You paid 19 cents. 19 cents for this. 19 cents. So don't come crying to me and say, Roger, I don't have $1,000 to play the options. You said I could do it cheap. I just showed you how you could do a $1,300 option for basically your job here is to, if whatever the spread is, you want to pay less than 50%. That's the rule. So if it's $1, you want to pay 50 cents. If the spread is $2.50, you want to pay $1.25. If the spread is $1.25, you want to pay 65. I think you get the point. $10. So let me show you something. Okay, this is a true story. Okay, true story. True story. So last night we did a trade on Taiwan Semiconductor. Okay, right here, and I personally bought a call option. Well, actually, I went long the underlying stock. Okay, so I have a fairly large account. But what a lot of folks did was they were buying this option here, 23, 30 days out, 37 days out, and the option would have costed them about $2,000. Okay, what I would have done if I were you, and I mean this, I would have done this, and I know a few people that did do this. This is what I would do if I were you. I would go 9 days out to next week's expiration, and I would have bought the 342.50. I would have sold the 345. Okay. And I would have done these at $1.25, $1.25, $125. So instead of paying $2,000, you paid $125. Your profit potential is 100%. And this morning, they would have sold it and they would have made not 100%. They would have made about 35, 40% on this. And I'm pretty sure there's some people here in this room that did that as well. But that's how I would have done that, okay? So let's go back to our sheet. 4 to 8 days out. Delta starting with 0.50. Goal to spend 50% or less of the spread difference between the strikes. Now, is this helpful to you guys? Is this helpful? Not only are we recording this, but we're here. So that's that right there, right here, right now. That's a scalp right there. Okay. See how it's just volume? How it's just moving? That's a scalp right there. Way overextended. That's a scalp type of trade. If this trade loses momentum, you don't want to be in it anymore. Just my 5 cents. But actually, it's not overextended, so you can actually trade this for longer term. But this is more of a scalping before the FOMC. Just be careful. Be careful here. Be careful. Don't use big numbers with these scalps, especially on slow days like this. Okay, but I just wanted to show you what a scalp looks like. Matt, can you hook me up?
Yep.
Okay, thanks. Okay, do we have any questions on this part of the presentation? Or the
A lot of
education?
very, very positive comments about this, Roger. People are loving this. There are a lot, and this is understandable. There's a ton of questions here with regard to your charts. How are you getting those charts? What is this? What is that, et cetera? And folks, this is not the place to address that, but we do have a complete, support team that can answer any of your questions as to how you can add, for example, the dotted lines to your charts and things of that nature. This is not the place for this.
Thank you, sir. I appreciate it. Thank you. Thank you. All right. All right. Oh, it's time to get comfortable, right? Time to get comfortable.
But once
Okay.
again, Roger, that the comments are overwhelmingly positive. People are loving the fact that you're taking the time to walk through this because the thing is this, folks, if you're looking at and understanding it for the first time, I can see how it's a bit overwhelming. But just looking at what Roger's got up on the display, it is as simple as what he is putting there. And yes, it takes some time and it takes some practice to understand these things, but it's not any more complicated than what Roger is putting here.
No, not at all. Not at all. Not at all. It's very straightforward, and a lot of people just follow these rules. Now, so just to summarize here, let me just summarize this for you. Trades that are not overextended from the 8-day EMA. Trades that have very high volume and are already moving or in motion. Okay. Stocks that are showing crazy high volume and stacking high volume candles in real time. Okay. So just, and can replace swing trades. Not day trades, not, I wouldn't be doing debit spread. I mean, you could, but I wouldn't be doing that. I would be doing that only, can replace swing trades for much lower cost. All right. Does that make sense for everybody? Does everybody understand that? Or do I need to be more descriptive than this?
Everybody cool on this? The most amount of questions, Roger, came up around the debit spreads. People just trying to understand that a little bit more. Where are you buying? Where are you selling? How does all that apply itself? That's where the bulk of the questions
So
were.
basically, here are the two rules for debit spread. Start at a delta of 0.50 instead of points. So here. So here's the debit spread. Look. Where's Okay, so they put the heater on so high in here when it's hot. Oh, you see, it's going further down. See, the momentum hasn't stopped. See, it's still continuing. Okay. All right. So let's just go to not GM. GM. This was a great stock to day trade yesterday, by the way. See, this was a good scalp yesterday or a good day trade yesterday. Too much for a swing right now, but for a day trade or a scalp, this would have been good. Okay. So let's try to find a DD. That's a good stock. Okay, DuPont. That's a good stock. So let's say you want to do a swing trade on this stock. It's just kind of moving up right here. It doesn't have weekly options, which doesn't help us, but it's not liquid. Let's pick something a little more liquid. How about Applied Material? Okay. Yesterday was yesterday was a good time to swing it. Today's a good time to day trade it. Okay. Okay. So sorry about that. So look, I don't look at the option strikes. I look at the deltas. Okay. I look at the deltas. 335 call. Okay. 335 call. 5-3. Or you could start here. I would just start right here. And then what's the 340 call? How much does it cost? What is the spread going to cost you? Well, you could see right here, it's going to cost you about $1. You know this is $2.50 spread. It's time for me to go long Taiwan Semiconductor again. All
Did
right.
your alert go off?
Yeah, it just went off right here. Look. Second bite of Apple. Taiwan Semiconductor crossed 342.38 to the. I mean, I'm not like joking around here. I actually remember when I said if it goes here, it's the second bite of the apple. All right. Okay, so we were looking at Applied Materials, right? How about we just look at Taiwan Semiconductor in case anybody wants to take this, but right here.
Okay.
So the spreads are $2.50 apart, right? And what's the difference in the price between these right here? Let's just say this is your cost, right? It's 88 cents. Your spread is $2.50 and your cost is 88 cents. That's clearly less than 50%. Well, 50% would be $1.25, right? Of $2.50, right?
Mm-hmm.
So there you go. Mazel tov. You're good to go. What's there to there's nothing to think about. I've explained this so many times to folks. So many times. So you want to make sure your cost is 50% of this spread or less. And you want to make sure you're not down like to 2 days. So here's the question you should be asking me, okay? Roger, why are you only going 9 days on the debit spread? Why are you going 9 days on the debit spread? And why are you going uh 4 to 6 weeks on your swing, since you're saying it's a replacement for a swing? Has anybody asked that question yet, Raleigh?
Yeah, there's a lot of people asking whether or not, are you sure it's 4 to 8 days on the debit spread?
Yes, but I was hoping you would ask me why. That's the better question.
Why?
All right, that's now I feel better. All right, I'll tell you what. We're about to get stopped out. 1 second, we're about to. Oh, not yet. Almost stopped out. Almost getting stopped out. Okay. So the reason is this. Here's the reason why. Because notice we're doing out of the money options. We're not doing in the money options. We're doing out of the money options. Delta of 0.50 is at the money, and you're selling the option that's one strike price up, right? Okay. So you're out of the moolah. You're out of the money. And when you're out of the money, you get a lot more, the options are much more expensive, much more expensive out of the money options than they are, in relatively speaking, much further out of time. So you're using that extra cost and premium because a lot of people are speculating using out of the money options are expiring in about a week or two. So you're using that premium to finance your fiasco, your part of the bargain, because remember, you're selling it. So this option right here, where the hell are we? Oh, here we go. This option right here, it has a lot more time. It has a lot more implied volatility. Okay, relatively speaking. Actually, we'll look at it right now. Let's take a look. But usually there's a bigger disparity of implied volatility. See, you guys are getting a lot more than you bargained for today. Okay, let's see. Let's go. Actually, it's pretty high. It's pretty high across the board. But usually what happens is the out of the money option that expires a week and a half, 2 weeks out, has a lot faster decay and a lot faster disparity than an option that decays in a month and a half. So what happens is you can be in a situation with this option where the price of the stock doesn't go anywhere. It just stays there, and you still make money on the trade because this option is going to decay faster than this option, or this option is going to decay faster than this option. Whereas 5-6 weeks from now, you're not going to really feel that as much. And the fact that usually implied volatility is higher on the options, as higher on the options than as you go up. We saw it yesterday. Remember, Raleigh, we were looking at earnings yesterday on stocks that had earnings, and it was like 100, 80,
Yes.
70, 60. I guess it's just not as profound here because this is a pretty high implied volatility stock. Yeah. What last second here? I just got to check something. Okay. Now we got. I'm just making sure that I gave them the right level for a stop. Yeah, 76. Okay. All right. There we go. Okay, so that pretty much explains it. So to summarize, now let me give you the sheet. And again, I apologize, but I am trading in real time. I think that's pretty evident, folks.
Yes.
All right, let me go ahead and give you. I'm going to give everybody this thing. So as you could see, we do all sorts of trades in the pit, and I would say that 8 out of 10 people in the pit, they use the approach that I just explained to you, and I just posted it for you. Okay. Yeah, you're always selling the higher one for calls and lower one for puts. Okay. That's That's how it works. Lower one and higher one. All right. Do we have, Raleigh, before I move on to the next segment, do we have any questions, my friend?
No, I think you've done a terrific job. I mean, it's been once again, a lot of the questions that came up, Roger, had to do with specifics of, how do I get my chart to look like yours? Those kinds of questions. And we're not here for that, folks. We have other ways to handle that. But, the spreads were where the most amount of questions were. And maybe that's because people are new to spreads or the concept of spreads. And I like the way you put it, Roger. I mean, let me tell you what I heard you tell me is if you take a look at what might look like a good call, but it's expensive, one of your options is to do a debit spread because it's going to lower your cost and you're taking advantage of that directional move. The difference is you're not going to be looking to going 4 to 6 weeks out. You're going to be looking to go, 4 to 8 days out. And you're basically going to lower your cost. Your point is, hey, some people will say, Roger, you're giving me these options to trade and they're going to cost me like $1,000 per contract. I don't have an account that can handle that. It's a beautiful time to take a look at a
Yeah.
debit spread.
Yeah, absolutely. Absolutely. 100%. Okay. All right. So, with that said, we are now, if that sounds interesting to you, this is going to be the last day that I'm doing this. And I really do mean that. This is going to be the last day that I'm doing this. Um, we've had a really good success in the pit, including a trade today, a trade from overnight, and the day's not over yet. I have a lot of information for you. I posted this information for you in the Telegram channel, and I don't think I'm going to post it in the. I mean, I don't think there's any reason for me to post it in the pit, in the Telegram channel. I think you guys all have it right now, and I've posted it before many, many times. This is not the first time I'm doing this. We've done this sheet many, many times before, many, many, many times before. But I'm about to have a master class on the pit, and this will give you all the things that I probably missed explaining all this to you and answering questions. But I'm going to go ahead and close the chat again. Otherwise, it's going to get me in trouble. And I truly, 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 truly hope that you guys pay attention and you listen and you take notes because I think this will be I think you guys will truly, truly enjoy this. Okay.
Yeah, and
Truly, truly
also
enjoy this.
for those of you that are watching this on YouTube, we're about to close that stream because YouTube does not allow us to do promotions like the ones we're about to do about the Trading Pit on its YouTube channel. So if you're in YouTube, I think Matt, or there's a link there where you can come over to the Zoom room. If you're already here, and once again, you're in the chat, there's nothing for you to do. Just hang here. But what Roger is going to do now is he's going to be talking in much more detail about what the trading pit is. It's going to refresh some of the things that you just talked about during the VIP session and do a much deeper dive into exactly how that works. And then we've got some very, very special promotional pricing that we